Good morning. Today is, what is today? May 9th, 2019, and we're going over the price of oil. Um, we always start with the daily chart. The daily chart is important because it gives you a big picture view of what the market is doing. A lot of times, when I talk to other traders, they have tons of ideas about what the market is doing or what somebody said or what the these indicators or whatever is indicate, but they can't answer that single question: what is the market doing? And that is the first question you need to answer, because the first thing we need to do is assess the market condition. If you can't do that, you're already out of the ballpark. So right now, I know it looks like a lot is going on in this chart, but what we're going to do is focus on a couple things. All right, here is your um, average true range trailing stop. It's a great indicator to tell you, are you in support mode? Are you making new highs? Or are you breaking down and making new lows? And that's what we really need to know from the daily chart. Are we making new highs? Are we making new lows? So you can see ever since January, we've been making new highs. This is the new high indicator. Every time it closes a green bar, it prints a new high. So we'll just outline that daily average true range, and you can see right here, this bar on the 2nd of May penetrated the average true range trailing stop, and now it's up here. So we're in a resistance mode. We're making new lows now. See, this is a new low, this is a new low. So we're anticipating new lows, more of these. What I also want to know on the daily chart is, what is the average true range? And you can see that right here. And the average true range is picking up. Now we're at 1.6. And I've sharpened the average true range a little bit from a period of 14 to a period of 7. So the volatility of the market is number 2. So number 1, I want to know from the daily chart, are we making new highs or are we making new lows? I also want to know, what is the average true range? What is the volatility of the market? How is it fluctuating up and down on a daily basis? More like a vibration. I think of it more like a vibration. What is the amplitude of that vibration? It's 1.7. 1.7, that's the magic number. It's a very important number. So just to recap, on the daily, we've broken the average true range trailing stop, going from a support mode or a new high mode, and now we're in a resistance mode or a new low, making new lows. All right, that's number 1. Number 2, we are in our average true range is 1.5, 1.6, 1.7. Yesterday, this day was 1.7. So somewhere around 1.5 to 1.7. All right. Let's look at, then the other thing I like to look at on the daily is ranges. Ranges are important. Ranges can act as support or resistance. And so I'm targeting this range here on this day. And you can see I highlighted that range. Okay, because my thinking is the market is gonna test this range. There's lots of sellers in there that caused this big move to happen. They're gonna add positions on when the market retraces back to them, and try to extend the downward momentum to another low, which is what we're trying to get here. All right. So I look at range, I look at market momentum, we're making lower lows, I look at volatility, and I try to target that range. You can see I highlighted that. All right, then I start moving down to the lower time frames, like the 12-hour time frame. Okay, and what I'm looking at there is mainly this guy. What is the average true range trailing stop? Where is it? Okay, that's a very important indicator for me. It tells me where I should be putting my trailing stop, where the market most likely will not go. So I'm gonna outline that as we go down to lower time frames. I'm gonna outline that. So this is the 12-hour. This one was the daily average true range. This is the range that we're inside of right now. Okay, and you can still see that the 200, at least on this time frame, the 200 is still below price. So we're kind of like all the charts aren't in agreement yet. All right. Let's look at the 4-hour. And again, on the 4-hour, I'm looking at, is the average true range trailing, the market nicely? I'm starting to look at measurements. This is like we're looking at a telescope on the daily level, and then we're starting to use the microscope when we start to get to the 4 and the 1 and the 15. All right, so micro levels are the pivot points. Big levels are the average true ranges. Okay, so as we get closer and closer, and on lower time frame charts, the way I think of it is almost like, on higher time frames I'm using a telescope, on lower time frames I'm using a microscope. All right, and there's different things I'm looking at. So we're on the 4-hour. This is our range on the daily. We're playing what you can see, we're inside that range, we're testing the range, and I'm looking at where the average true range is on the 4. It's right here. I'm looking at potential reversal points, like this engulfing candle here is a potential reversing point. So I'm making a note of that. And then I'm gonna go to the 1-hour. All right. And on the 1-hour, this is where I really start looking at the moving averages, where they are in relationship to each other. So here's your 200. See, it's flipped over. Here is your 50-period moving average. The distance between these two levels is called your average value zone. And it makes sense to call it that, because you're basically averaging all the price movement over the last 200 periods on this line, and over the last 50 periods on this line. So this is a zone between the fast and the slow moving average. And it can act as support or resistance. So like here, see, it came into that zone, fell off. Came into that zone again, fell off. So we're kind of anticipating,
it's 7 hours,
that we're anticipating that this, somewhere in here, the market will act as resistance. All right. Number 2, I'm looking at movement. I'm looking at measures like how much have we moved from the previous low. This is the previous low. All right, I'm measuring that with the trend tool. From that point, we've moved $1. Okay, we moved $1. that's close to the average true range. We're at the top of the cycle. So we're at a cycle high right now, cycle high. We're at the end of that, well, maybe at the end of the cycle. And we're in the zone, retracement to resistance. Retracement to resistance. In a downtrend. Remember, we're trying to, all of this is just about trying to get the lower low. We're trying to hit the lower low with a good risk, okay? You have to keep the big picture in mind and the little picture. That's the key. Big picture is market is making lower lows, okay? The volatility is 1.5, 1.7. So keep that in mind. We're trying to make another lower low on a higher time frame. How do we do that? Retracement. We find a good retracement to, I'm sorry, resistance. I said support, I believe. Resistance. You can use the smooth moving averages to kind of give you a gauge as to where resistance could be. Okay, it's not a clear, line in the sand thing. So now the last thing I do is when I see a good pullback like $1, the average true range is 1.5, so that's close to doing a full move, a full range. So my thinking is probably the high of day is around here somewhere. See, we've had previous higher days around this level. Higher day is for today is around this area. And it looks like they're kind of selling off a little bit from here. And then if I think about moving in, remember we're at the setup. So we've analyzed the condition. We're at the setup. Now it's time to measure risk versus reward. So we're assuming that the market will not go above. Where it will not go, most likely not go, is above this range, the daily range we identified. Okay, won't go above that range, most likely not. And so we're around R3 right now. So if you want to go above R3, that's great. If you want to go at the top of the range to put your stop there, that's great. Okay. I could bring that in a little bit. So what I'm risking is 1.8. 1.8. Okay, and at any point in time, the market can do the average true range, especially when you're at the top of the day. Like right now it's 7:04, and we're about to go into pre-market and then New York session 9 to 12. So during that time is when most of the movement happens for the day. So we're really positioning nice right here. So in other words, between now and 1 o'clock, most likely this market is going to move $1. Okay, so what you're obviously trying to do is move $1 down. Okay, $1 down. So that would put us, maybe around at the previous low, or we might even hit S2. You might want to get out here at S1. Most likely will not hit S3. Most likely will not. It doesn't. Very rarely do you hit S3. Most of the time, you're hitting S1, S2, R1, R2 levels. And so our outlook is basically kind of, you know, to here or more. Now, you know, and then that gets into the management phase of trades. You know, when you get to that level, what do you do? How do you capture more, as many points as possible? That's management. That's further down the line. We'll talk about that later. But I think everybody at this point is pretty on board with where we are technically, right? I think so. So we're risking 1.8 to make 1.2, almost a 1-to-1. Sometimes you have to risk a little more, you know, to get the move. You might even take it off at 50% of what you're risking. Just depends on what happens over the next few hours. Now, that's the idea of the day trading strategy. And just pull that in. See, here was our 12-hour. That was our 4-hour level. So we're above the 4. We're above our 3. We're not going that far out. But it gives you an idea of where the price most likely will not go, and therefore where to put your stop loss. Right now, the market is kind of in a consolidation phase. You know, we made this big, we broke support here, right? Broke the support level here. And that was like a $4 move between here and here. And usually when the market makes that kind of move, it goes into a rest phase, or kind of a consolidation phase, where it's moving sideways. Then it makes another extension move, then it moves sideways, then it makes another extension move. So right now we're in a sideways market, you know, and they're probably building positions, building and adding, then making a boom, big move. At some point we're gonna get a big move. That's my thinking. So we're just positioning right now. It might not happen today, it might happen in a few days, but most likely this trend is going to continue. Let's go back to the daily. See, this thing started at 5.2. We're early in this down cycle that's about to happen. You're early in. These cycles last for months or weeks, so we're early in the cycle. Just time to relax and position, get a good risk to reward position going. And you might have to risk a little more at this phase because the trend hasn't settled in yet. So we're okay risking a little more because we're trying to get a lot. We could potentially get a lot here. A $3 or $4 move, we could capture that easily. Okay, hope everybody has a great weekend, and we'll talk soon.